Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on CyclesMan.com. Merry Christmas, Tim.
Well, Jim, Merry Christmas to you.
Tim, you have some notes on... Well, they're saying it's not quantitative easing. Is it quantitative easing?
You know, that debate goes on and on. We talked about that last, 2 weeks ago in the last show. And, you know, I've been watching some stuff and, you know, the argument is that it's not QE because it's short term. But then I checked some of the numbers on the Fed site just before this interview, and what we are seeing now is that we are seeing, you know, the monetary base is increased. I made some notes here, 280 billion, looks like. We've seen the excess reserves are up about 260 billion. The Fed's balance sheet itself is up about 400 billion. So from that perspective, it looks like QE. You know, from the perspective of being short term, no, it shouldn't be, but it looks like it is. So I don't, you know, non-QE, QE. But you know what? It doesn't matter because the consumer is not taking on more debt. The fact is the economy, in spite of what we're being told, it is not expanding. And all we're seeing is a bubble, an equity bubble that's getting bigger and bigger and bigger with the economy in a stalemate.
What is this money being used for to prop up the market? Is it just share buybacks?
I don't know. I don't know where the money's going. I don't know. I haven't looked into it. I haven't researched it. I don't know. On one perspective, you know, we know that the repo thing is going on, and maybe it's just the illusion that they're doing QE. I don't know. You know, if you have an expectation based on the QE that we saw, you know, QE 1, 2, 3, and whatever in the twist back in 2008, 9, 10, whatever, then maybe it's reacting sheerly on the expectation that it's supposed to work. Does that make sense?
Can they continue to spend $60 billion a month on this non-QE QE?
It's way more than $60 billion a month. I ran some numbers. I mean, it's all available. You can go look this stuff up. But before Thanksgiving, you know, and I'm talking cumulative. You know, some of it's, you know, was overnight. Some of it was, you know, several days. So there's different durations. But cumulatively, the numbers were, it was before Thanksgiving, I believe, or right around Thanksgiving. And the numbers were like 4.3 trillion cumulatively. 1 week, I think it was the week before Thanksgiving, and I'm saying this from fuzzy memory, but I think it was the week from before Thanksgiving, it was like 387 billion that week. So there's a lot of money going somewhere, and you know, you see these articles on Zero Hedge in various places, and everybody, all the experts trying to explain it. I don't understand the repo market. I don't know if anybody totally understands the repo market. It's such a shadowy, complex operation, so I don't know. But there's a hell of a lot of money going somewhere.
So should this be making people nervous if we're not really sure where it's going and what it's doing?
Well, I think it's a sure sign that there's something is wrong. I mean, at minimum, it should tell you that something is wrong. Something is not right. That's a certainty.
And so if you have that kind of uncertainty, should you be putting the money into the market, or should you just be holding onto your cash and hope the government doesn't find a way to grab it somehow? I maintain that, and you know, we can get into that when we talk about equities, but
I maintain it's a big, fat, ugly bubble. And I think, like all big, fat, ugly bubbles, it's when control is lost, it's going to be a big, fat, ugly problem. When that happens, when it can't do it anymore, when control is lost and it can't do it anymore. And when does, I don't know. I mean, I didn't think we would be here. I didn't think it would last this long. I don't think anyone with a historical perspective on the market could have imagined us being in this position. So that said, I do believe that we will see, well, I know. I have no question about the fact that we will see the setup occur to cap this thing eventually. What we have seen thus far is every time a setup when I say setup, a technical setup will try to take hold, we see it attacked with news, with the intervention. Like last October, this past October, really coming out of the September high and into October, the market was literally on the knife's edge, and we saw the intervention that we saw. That's when they came out with this non-QE QE. That's when the news was pointed toward they brushed off the China trade deal, and we the hammering on the job reports, and it was all targeted to turn that market. And from a technical perspective, looking at the market from my seat, what I saw was it was an effort to prevent that technical setup from taking hold, and that's what we've been seeing. And this is it's going to go on until it can't, and then it can't.
We'll have more with Tim Wood right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Tim Wood. Tim, what's going on with the U.S. dollar?
Well, short term, we had a little low last week. At a higher level, I think that, there's a correction still underway. I tend to believe that there's another little intermediate term move down into probably late January, February time frame. Maybe into March, but just call it February and call it done. But sometime in that time frame, and then I think we're going to have, a clustering of cycle lows there, and we should see strength in the dollar continue. Crude oil, the advance out of the August low, that's been in conjunction with a counter trend move, and what I think was this latest reinflation effort. And looking at gold, I think that we had this last push up into the 9-year cycle top, which I think should be in place now. This strength we've seen since November, I think, is counter trend, and I believe that gold should set up and continue lower. I think what we've seen here with this little pause has been in conjunction with the attempt to reinflate. And then, looking at interest rates, we saw a bounce start in August, and I think that the little bounce in interest rates has also been counter trend in conjunction with the effort to reinflate.
Crude oil, is it going to go down?
I think so. Yes, I think crude oil and the cycles in crude oil, raw materials, CRB, they're all related, and it tells me that it's counter trend. It's part of this levitation act. It's just hanging on. But yes, I do think that we're going, unless we see a genuine reinflation, which we have not seen yet. Yes, I think crude oil and commodity prices, raw material prices, are going to resume to the downside.
We'll have more with Tim Cyclesman Wood right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, your outlook for 2020.
Well, I think, number one, we're going to see a continuation of the engineering, I should say, of a phony recovery. And I think we're going to see a continuation of, in the process, I think we're going to see a continued effort to pressure the dollar. I think we're going to see a continued attempt to create some sort of a rise in interest rates, preferably on the long end. I think there's going to be an attempt to get commodity prices up, keep them up. When I say keep them up, this little levitation that we've seen, and all in an effort to create an illusionary expansion of the economy. And if I can talk about that illusionary expansion of the economy, just to digress for a minute, we hear all these statistics with numbers of an expanding GDP, and it's at the highest level, and we see unemployment's at the lowest level, and we hear and those are true. They're true if you look at the raw numbers, but if you look under the hood and you look at the growth rate, and I cover this in the last couple of letters extensively, but you look at the growth rate, there's been no expansion, and that's just a fact. There's no expansion. And so we're seeing one thing and we're actually seeing one thing, and you're seeing it if you go look for it. And we're hearing something else. And when I say the illusion, that's what I mean. We're not exactly being told the truth here. But anyway, the irony of trying to create some growth here and inflation is that, back in 2018, in November 2018 to be specific, the market proved that it couldn't take higher rates, because that's when the 3 and 10-year cycle bottomed in bonds and interest rates started to rise. Immediately the long end started to, interest rates started to decline on the long end, and the market, it kind of, I say the market, the bond market checkmated the economy, if you will, checkmated the Fed, really, and that's when they did their about face. If you will recall, last November they were bullish on, or I say bullish, they were very positive on the economy. They were talking about how we were going to have future rate hikes and so on and so forth. But then, when those cycles bottomed, the long end immediately turned on them. And then in the December meeting, remember when it came out and they were, all of a sudden the talk was how dovish they had become. And that's because they saw what was going on. And then this year, we saw, as these longer term cycles and interest rates, continued, and the bonds continued moving up, interest rates continued moving down, the longer term rates continued to decline, and then finally in, I don't remember, May or so, April, May, the short end started to decline, and they were forced to begin to cut rates, which is what they sensed back in December. And I think that trend, in short, I think that trend is going to continue as well, all in an effort to try to hold this thing together. And, like I said, fact is, there is no growth rate looking at the actual jobs numbers. It's kind of a shell game. I know that's hard. People may find that hard to understand. Again, it's hard data in the letter. There's no growth. There's no growth in consumer credit. Without growth in consumer credit, there's no expanding economy. I mean, it's just that simple. And so, again, we're not being told the truth there. So with like I said, the irony of it is they're trying to create some growth in the economy, but then the economy can't withstand any real inflationary growth. It can't withstand any real rise in interest rates. But then, it's kind of got them in that sense in a box, so to speak. So we're in this period of, if you will, a friend of mine described it as a period of tranquility where everything kind of seems okay. They're keeping the wrapper on it, but they're somewhat in a bit of a box with this. And the best they can hope for is to try to keep everybody, thinking that everything is okay. And I think that's what we're going to see in 2020, with, just a continued engineering of trying to keep things together with, hopefully a little bit higher rates and, try to stimulate some growth.
Well, when you said there's an illusion of, low unemployment, is that because people are working 2 or 3 low-paying jobs when before they had one high-paying job?
I don't know about that. I don't know. All I know is, if you look at the raw, and there was some, again, not to pick on him, I'm not. But if you look at what Trump said, because I fact-checked myself on this, but he talked about, I found an article even, I remembered the conversation, I remember him saying it. And then, I found the article, but he talked about how the unemployment numbers are phony. And I think, I don't know what's in the man's head, but from what I know or think I know, is he was talking about how the numbers are doctored. It's kind of like you take all the real core inflationary stuff out of the inflationary numbers and then say there's no inflation. So it's the same sort of thing. They're doctored numbers, and where the truth lies is with the growth rates, and there's no growth. There's no growth. So that's what I'm saying with the economy. And then we're just kind of in this levitation period where, they're doing everything they can just to keep it afloat.
Tim, have a great New Year and a happy Christmas.
Thank you very much, and Merry Christmas to you and all of our listeners.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. Have a great holiday, everybody. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.